Hey guys, Mike here. So, about what another volatile roller coaster day, to say the least. And it was an interesting day because yesterday after market closed, you guys probably don't see the futures, but if you do, we sold way down. People are like, "Oh my God, they're tanking again!" And then we had this big rally throughout the night, coming into pre-market, and then some news dropped in pre-market that the market did not like. It spooked the market because this is what's going on, right? When we're worried about growth concerns, having a growth scare, right? This didn't help. So of course, that happened, sold the market back down. Then you got America and Canada and our president and their prime minister and whoever's in charge of their provinces going head to head, making big threats, pumping their chest out and stuff. And so we got the tariff stuff going on throughout the day. Finally got that settled, hopefully. We'll go through that. But there was some things that's happening behind the closed doors, right? One thing is how many puts are being bought, right? And so I'll show you a chart showing you we have hit a new record. Okay, and I'll show you what happened the last two times you saw big spikes like this. And then also, for the first time in a long time, we held the daily move. Like the options market sets these moves, and I put it out to members every day. And I mean, we blew through the monthly expected move within 3 days. The weekly expected moves have been getting blown out. We're going way below those. The daily expected moves way below those. But the day we finally held, we only like 7 cents underneath it. I was like, hey, look at that, right? And you might have noticed on my measurements, we got down 10%, but again, maybe they're not counting the wicks. So, but as soon as we got near that 10% today, boy, it bounced hard. I mean, the market bounced hard. I don't think that was no accident. Okay, this is different. The Q is going into correction is one thing, but the S&P is a whole different story. That is a whole different story, and we, it hadn't been there in a minute. So we'll go into that. I will say this. There's one thing I'm going to mention here close to the end or within this video somewhere, that this is the first time I'll be able to track this. If we have a crash, I'm not saying I hope we have one or anything, but this will be the first time I'll be able to track it if we do have a correction, and the first time I'll be able to track it from point to finish if we have a crash. And I did a members video on this yesterday, showing members, like, you got to track this. I'm telling you, it'll open your eyes up to a lot. It did me. Thank God. This is a good thing about having a community, having members and stuff like that, to open your eyes up, okay, to certain things you can watch and go, oh, well, that makes sense. I see what's going on, and I'll explain why, how important it is. This is really crucial, okay? And I ain't say I'm excited to track it, but I mean, it's fun to be able to see it and to see how it plays out and see it, because it can help me all the way through, for the rest of my life, really. And I can teach it to my son and say, hey, this is what you need to be watching. Forget this other stuff over here. Now, I do want to ask you right off the bat, though, because this is floating all over Twitter. So what happens when you go into a sell-off? Where are you at? Where are you at? Because I know people are telling me they're in hope, they're in denial, some are in panic, some are in disbelief. And there's actually two questions. One, where are you at? But also, where do you think the stock market is at? Because that can be two different places, depending on your portfolio, right? And so if you're sitting in a bond portfolio, you might be in one place, but you say, oh, no, the market's over here, right? And so two different questions there. Put in the comments where you're at on this chart, and then where you think the market truly is at. Now, when you look at what happened this morning during pre-market, I put this in the news brief right here. Remember, we're having this growth scare. And when you look over here, airlines came out today. Now, remember, they were bragging about how busy they were less than like 45 days ago, I'm talking. All of a sudden, you got Delta, all the major carriers coming out saying, oh, man, we're going to go ahead and guide down now all of a sudden. And I'm like, what? What are you talking about? And so all of a sudden, they slashed their first quarter forecast. Stocks dropped. That's interesting. And if you fly Southwest, by the way, you're fixing to pay for luggage for the first time, because probably they're going to go ahead and put a luggage fee on there. But actually, their stock went up after they said that. So that's going to be more expensive for you to travel on Southwest now. That kind of sucks. But again, what are they citing? Tariffs, uncertainty, things like that. Also, a big one's going to be government spending, right? Because remember, we prop up these airlines, okay? We bailed them out in 2020, but also the government passengers. We have a lot of contractors that work for the government. So out of D.C., United came out today and said its first quarter earnings are now expected to come in at a lower end of its forecast due to a 50% drop in government-related travel bookings. The airline said reduced government spending was also having a ripple effect on the domestic leisure market. And now, of course, I'm not upset at all about that whole 50% slash in the government spending thing. That's great. I mean, please, yes. And I hope if they do, if you're in the government flying, I hope you're flying coach, for crying out loud. But yeah, that's a big one. Because remember, they get a lot of money out of D.C. with that airport. It's one of the busiest ones, right? So that's a big one. So of course, the market's like, oh my God, this they're telling us, right? Now, I have no sympathy for these airlines, because remember, we spent billions bailing them out in 2020 for them to turn right around and then raise prices through the roof, charges for everything but oxygen, okay? And maybe I'm the only one that gets aggravated about that when you got to travel and you see what they're charging us. But to bail you out and then you turn around and do that to us, I don't know. Maybe it's just me. But serious. So now Southwest will start charged for baggage as well. Now, the next thing goes on here is what? Canada and America going back and forth. So this was said yesterday. I didn't get to show you a video, but now I'll show it to you real quick. It's a very, very, very short one. And then the retaliation from America.
We will apply maximum pressure to maximize our leverage. That's why today we're moving forward with a 25% surcharge on electricity exports. If necessary, if the United States escalates, I will not hesitate to shut the electricity off completely.
And then, of course, the day after that was said yesterday, here comes Trump. He's going to raise Canadian steel aluminum tariffs, which is supposed to take place tomorrow, not by 25%, but by 50%. So then all of a sudden, his administration, Canada's administration gets on there and they start talking. And all of a sudden, they back off the 25% deal with the electricity. And then, of course, we back off the 50% steel and aluminum tariff. So all the ups and downs and the rigmarole and all that fun stuff goes away. So that's kind of the daily market grind. It's what we go through every day when these algos are reacting to all this. Now, one thing to watch here is the U.S. total put option volumes. The 5-day moving average, you see the spike. All right, all-time new record high once again. And we go back and look. I can't get the exact day on this, but when we look at the other times this has happened, you can see those big spikes to the left right there. One clearly is setting in the first quarter of 2023 as I draw the line down right there. And then the other, when we look at it, is clearly about somewhere past summer right there. And so when we go back and we'll pull up the charts and we'll look at it and say, okay, you know, what was going on during this time frame? Well, obviously there was sell-offs going on. And when we look at 2023, it was right here, right? We sold down almost 10%, I believe it was, not quite, right there in the first quarter. And then in March 8th, we took off. I don't know the exact day that level happened. Again, it's a 5-day moving average. But then you look at 2024, this is when we sold down from July to August, okay? And so I don't know the exact date, but either way, usually when you get this many people short in the market, there's some kind of relief rally. They'll call it a short covering rally, a short squeeze, whatever it is. We still ain't got one, okay? We still ain't got one. Now, one good thing is we did finally hold the daily expected move. We only missed it by 17 cents. We've been missing this thing. I'm talking about way down. And these expected moves are huge now, much bigger than they normally are, much bigger. And so, you know, to finally at least hold one, that was nice. Good to see that. Because, I mean, when you're blowing out weekly expected moves and monthly expected moves in like a day or two, like Monday, we were already below the weekly expected move already. Okay, and that's been happening week after week. But that's what happens when you sell down. The option market is having problems trying to figure this out, right? One reason is the VIX. The VIX is staying elevated. 1, 2, 3, 4, 5. I think this is like the 6th day it's above that white line, which is not good. You can see in other places it barely touched it, may have stayed above it a day. Here was a big one. This was the August one right here in 2024. And so that's when we, you know, sold down, which I already showed you that one, July to August or whatever it was. But you had this big spike, and it's about 5 days. And you cannot have a sustained rally with the VIX just lingering up in these areas, okay, especially if it continues to want to go higher, but it's just lingering there. And so normally you'll get a big move down, but it needs to get below that white line. If it gets below the white line and starts to sell back down, yeah, you can get something going. So that's, again, that's one of the things you have to watch, right? And when we come over to SPX, you know, we're going to finally get it, you know, move up or whatever, I don't know, but you can just see like today was just crazy, crazy, crazy volatile. And again, there's the peak. And so when I measure this on TradingView, not that it's got to be 100% accurate, but mine puts me at 10%, which means we were probably like 9.98 or something. But as soon as we got down there, I mean, as soon as we hit it, it was, I remember Twitter saying, oh, we're approaching correction range. Bam. Almost a 2% move in the S&P in an hour and a half. That's a big move in a short amount of time. Okay, big reversal. And then, of course, another 1% move back down. And so we held up. Again, that's a JPM collar level right there. Is this going to be where we finally start to at least get some traction forward? Remember, we got big news tomorrow. CPI is coming out, okay? And so we'll see what the market's, how it's going to digest it. If it comes in as is, right, or especially if it comes in under, then you could see one of those short squeezes for sure. And the targets I'm looking for, if that were to happen, I'm just going to start targeting daily fair value gaps and what's the percentage moves here, because that's basically what's been going on. You can see we're still in negative gamma. VIX is still super high. All that fun stuff. When you look below here, when we pan out, there's a daily fair value gap, which we touched today. Able to get a bounce right there. Remember, we talked about these before. This liquidity is grabbing into. Normally, when you come down in there, you will get a slowdown, kind of a support area. And then up above, you have another daily fair value gap, okay? And so that's it. And either way, for this to happen, it's going to be a decent move up, right? So if we end up moving up tomorrow, just to get through to the top of that daily fair value gap is almost like 1.8%. So even get to the top of that daily fair value gap, it's going to be 1.8% move, which is a big move, okay? Which will also put us above the 50-week moving average, and even get to the 200 again to see if we're going to get rejected is like 2.5%. So big move to even try to get back to the 200. Down below to mitigate that daily fair value gap is about 1.3%. Okay, we've been doing that multiple times a day. And so that's what I would be looking at tomorrow to see how this is going to play out for sure. And then looking at a couple stocks before I look at the thing, I'm telling you, you got to start watching like a hawk. You know, Tesla, I'm going to talk about this one because this bitch been hammered down, just beat down. And one thing that happened in extended hours last night, it filled that gap. A lot of people don't know that because they only look at regular trading hours. They're like, wow, this thing bounced hard because it filled the gap. So we can take that away. Completely filled it in after hours right there. So when it opened up, it didn't look like it filled it, but it did. And we know Tesla loves to fill gaps, and when they do, it rockets. And it had like a 12% bump. After that, gave a lot of it back today. I think it went red at one point in time, then started to move back up. But now it is in a 4-hour fair value gap right there as well because of that big move down. And so this right here, just to even mitigate that right there, is going to be like a 10% move up, which will put it right at that used to be support trend line right there, the ascending trend line. And so that will be resistance, okay? Again, if it loses that 212, 213 area where it filled that gap at, then we're clearly going to be coming down, mark out 210, 200, and then 182 on your charts, okay? Now, President Trump did come out and say today he's buying a Tesla, baby, okay, and kind of put a big thing out on, I think it was Truth Social or Twitter, one of the two. So, you know, they're illegally boycotting Tesla, which I'm not sure how you illegally boycott something, but that's what he said, and we shouldn't be doing this, and the globalists are boycotting and bringing down Tesla, so we need to support Tesla and go out and buy some cars, I guess. I will not be going to buy one. Let me know in the comments if you will be. But again, and then also Tesla said they'll be doubling production this year, if I'm not mistaken. So we'll see where it goes. Another one that's holding up really well, I hadn't talked about in a while, is SMCI after the huge move down. Again, I was like, hey, our paperwork's in order, pop, and then major drop. But it's actually holding up pretty well. It hit that 0.79 fib. It bounced. It's sitting at the golden pocket right now. A lot of damage to this chart. But again, this is one of those ones because it's a high flyer. If there's a short squeeze, it's going to be this one. It's probably going to be HIMS. You'll see your ELF, your high flyers, you know, Palantirs. It'll start mooning up for sure. So this is one because it has been holding up a lot better than NVIDIA, right? Which is kind of surprising. But they do make a real product. I still don't know if their books are actually in order or not. Hadn't heard much about that, but I guess they must be. All right. So now the thing you have to put on there, okay? You need to go on your charts. Okay. This right here is the spreads. You got to put in IEI divided by HYG. And this level right here is what I have marked out. So I talked about the members about many times. I've talked to them since this thing started to move up. But I was like, man, if we get through that level right there, that is not good. It means the bond spreads, right, are widening. And that the stock market does not like that, okay? And that's what happened today. It got above it, and of course the market came down. And when you look at this, you know, if we start to head up, there's a gap right there to be filled to the left. If it heads up to that trend line that you see way up there, right, that is going to put major pressure on the stock market. Let me show you what I'm talking about. You can see this. This is a daily chart. Those spreads start to increase, and these aren't even big moves, by the way. It looks like it, but not really. Look at the stock market. Anytime it goes up, it's an inverse relationship, okay? When the spreads tighten, which I've been talking about for like 2 years now, how tight they are, you know, the stock market loves it. It just roars up and all that fun stuff. And you can see the inverse relationship very clearly, okay? But when you go to a 1 minute chart, even today, you can see when it got above that level, as here it's coming back down, right, pre-market. But here, when it got above that level and started breaking out, boom, big move down in the S&P, okay, over 1.5%, I mean, almost 1.25%, excuse me. Then all of a sudden it started coming back down, SPY rallies up, it uses that shade area support, gets another big bounce. This is the big move right here. Boom, down we go, 1.4%. So these are huge intraday swings just today, by the way. And then, of course, we hit down. We're almost 10% down, all that stuff. And bond spreads start to move down, all that fun stuff. But this is just one of those things you have to start looking at this because I've never been able to track it through a correction or a crash or really paid attention to it. Just somebody brought it to my attention. So I've been doing it for, I guess, a little over a year. But after 2022, really, is when I started learning about it. And so I'm really trying to track this. Another thing to track, you know, which is the VIX for the bond market is MOVE, M-O-V-E. Okay, and so this is bond market options volatility. And you can just see right there, the thing's going up. Where's the market going? Okay, this is an inverse relationship too. Like the same way the VIX goes up in the stock market, and the same way, but volatility in the bond market is way worse because remember the bond market is valued at like 3 times that of the stock market. The bond market is the daddy. The stock market is the little annoying child that's saying, "Please, daddy, can I get a lollipop?" And the bond market is the daddy saying, "Yes, shut up. Here, take the lollipop." That's what it's all about. They manage risk and debt all day long. Okay, that's what they do. Without them raising capital, there is no large companies on the market. Okay, so it doesn't exist. And so that's why the stock market takes their cues from the bond market. Okay. And so that's why you need to track it. And so if we start heading towards that big trend line you saw, it's going to put a lot of pressure on the stock market. A lot of pressure. If you break that trend line, oh boy. Yeah, and if you remember, you know exactly what I'm talking about. I've discussed this many times. That's a whole different story. Okay, a whole different story. So please do that. It will help you out immensely, I promise. Now, and of course, I'll track it for us. But when you look at earnings tomorrow, we got a few out here coming in. Zim's going to come out. You look over here in the afternoon, Adobe, UiPath, Sentinel One's going to be 3 of them. American Eagle's Outfitter. We'll see if it does better than a lot of other retailers. And then the big data, okay? Core CPI month over month, CPI month over month, CPI year over year. That's in the morning. Crude oil inventories, 10-year bond auction will be very interesting. And I never talk about the federal budget balance, but maybe we'll talk about that since it seems to be on everybody's mind. So anyway, hope you guys got some out of it. Thank you for all who watch and share the video. Please hit that like and subscribe button on your way out. Think about signing up for membership. Less than a McDonald's combo, and that's everything you get with it. And I'll see you guys tomorrow.